Today we're joined by Mary Gooneratne, co-founder and COO of LoopScale. These guys are building out fixed rate lending on Solana, and they've already processed over $2 billion in loans since launch, with roughly 120 million deposited today. What's interesting is that their markets aren't just speculative tokens. They include millions of dollars tied to insurance exposure and also private credit strategies. So none of this discussion here is financial advice. I want to give a huge shout out to the Solana ecosystem for supporting these educational interviews. Mary, welcome to the show today. I would love if you could give an intro of yourself and maybe just an overview of why you started LoopScale.
Yeah, for sure. Thanks for having me on. Excited to be here. So I'm one of the co-founders of LoopScale. And so we started LoopScale a few years ago now. And like you mentioned, we are another lending protocol. We're on Solana and we're an order book based lending protocol. And so we started LoopScale, which I think will also segue into what we do. But we started LoopScale because a lot of what is considered lending or credit today on chain does not resemble credit in TradFi and doesn't have the same kind of configuration and sophistication abilities. You can't support a wide number of assets. You can't price on a per risk basis. And you're really missing this like fundamental primitive of a loan that powers so much in transaction volume and so much in really economic progress. And kind of the vision that my co-founder and I have for the space more broadly involves public blockchains running kind of the bulk of transactions that occur in traditional finance today. And so it felt inevitable that over time, there was going to be a new kind of lending protocol that included a broader functionality and a way to replicate some of what we see in TradFi, whether that's receivables or repurchase agreements, and actually have the infrastructure to support those kinds of credit products on chain.
I think it's super interesting. I was looking yesterday into like questions for this, and this is like a total sidebar. But like a month ago, my wife and I were like out to eat, and there was like a guy at a table next door, or next to us, and he's like, "You know why all the actors went on strike last year? It's because of those like the agentic AI robots." I was like thinking in my head, like that's total sidebar. That's not why they went on strike. But anyways, I started talking to my wife about like value, and I do believe that we're like headed towards a future where it's fine if you have stablecoin, or it's fine if you have a digital asset, or it's fine if you have stocks or different real world assets. I feel like probably we're headed towards a future where you're just going to be able to use that value in any way that you see fit, and whatever you have, you kind of have. So when I was going through your guys' site, it kind of made me think of that again, because I like that you have here, like, use any asset as collateral, and maybe talk a little bit about that for me. Like, as these real world assets come on chain and the ability to do what you can do traditionally, so maintain that same value, but add new value through kind of the crypto sphere.
Yeah, so I actually, believe that kind of the two pillars of finance really are having spot and trading, and then your other pillar of infrastructure is credit markets. And we've seen a lot of innovation on the trading side in terms of like new perps models, new exchange models. But we've, for lending, been kind of stuck in this pool-based model. Even with Solana's like introduction, it took a while until obviously we started LoopScale, and the big unlock with being able to do an order book model on a blockchain like Solana is being able to create an order book and create risk-adjusted pricing for every single loan. So this is something that not a lot of people realize, but when you are borrowing on, say, an Aave or a Kamino, the rate that you are paying for your loan, it is completely independent of the collateral you're providing, how much collateral, the duration for which you're borrowing for, and it's completely just dependent on the utilization of that principal and the demand for the thing you are borrowing at that given time. And so an important thing and that has a number of issues in terms of capital inefficiency, whatever else. But one of the biggest kind of downstream effects of that is you're always going to be limited by the types of collateral assets you can support in that pool, because every single asset you add kind of ruins the rate or drags the rate for everyone else. In that, if I add, say, some super volatile asset like a meme coin to this market, the fact that you're paying the same rate for borrowing USDC as someone that's using USDT as collateral means you could only add like so many types of assets before you're dragging the rate up or driving the rate up for everyone, regardless of the asset. And so by being able to price on a per collateral basis, you can keep that same risk adjusted yield across all sorts of assets while adding kind of different assets and supporting it, even if there's only one lender willing to lend to it, or if it demands borrowing at like a 25% rate or a 10% LTV. And so you can support this longer tail of assets and kind of this wide range of assets that hopefully over time encompasses your whole portfolio.
Yeah, and I think I think as these traditional markets, I think that's really been like the big shift that we've seen over the past 12 to 18 months is it's almost like we do have validation of what's coming. It's like, but it takes builders like you and what you guys are doing at LoopScale to get us to that point of kind of the mass adoption of all these assets coming on chain. And a lot of that is going to come down to, having what exists out there traditionally, leveraging the benefits of Web3 and essentially trying to avoid as much risk as possible because all of these big institutions hate risk. But talk about fixed rates and how, most DeFi use, you kind of alluded to this before, how most DeFi users are kind of subject to kind of these variable yields that move based on, I'm sure, a number of different factors, and you probably know way more about those those than I do. But what changes for people leverage or using the technology when borrowing costs are locked in?
Yeah, so this idea of like a variable rate open term loan that has become the only thing we've come to know in DeFi is way more of an anomaly in TradFi, and the norm between like most mortgages or corporate bonds or auto loans are fixed rate. And even if you have like a mortgage-backed security where the rate is floating, that's something that is a pool of fixed rate loans, and that blended rate might change over time. And so the reason why that is because institutions, for the most part, have kind of a fixed cost that they're looking to take on or for a fixed duration, and are kind of planning these different financial strategies or allocations over multi-month, multi-year, multi-decade time horizons. And so to have a borrowing cost that overnight can kind of eat into your entire P&L on a specific carry trade is kind of just like a non-starter. And so especially as we move into more of these RWA assets where the yield is more stable or in some cases fixed, it only makes sense to kind of carry out this trade with maybe like you only have so much excess margin if you know that your borrowing cost is locked over that same period of time you're hoping to hold the asset.
So I know that, another thing that we've seen certainly like more recently, and this is not stopping. Like I always like looking at the RWA XYZ site, which is like basically like the aggregator that you can't, I mean, it's great, but even that we know is kind of probably not fully updated. And if you look back to 2021, it was like $120 million of RWAs on chain. And now you look at 2026 and we're somewhere around, I don't know where it's at right now, let's say $25 billion excluding stable coins. But there's more and more real world assets coming on chain, meaning that there's got to be more and more kind of institutional grade products for these entities to kind of leverage as they come on as well. And you guys have some pretty large markets as far as reinsurance exposure. And I'm going to mispronounce this, so please correct my butchering. Over 13 million associated with, is it Acred? A-C-R-E-D?
I say Acred. I think I've heard I've heard other people pronounce it differently, like Acred.
Okay. So tomato.
Yeah.
And over 2 billion in loans processed. So talk about real world asset traction and how it's growing on your platform and what you would expect to, continue, or maybe some lessons that you guys have learned as well.
Yeah, I mean, it's pretty cool, like you said, thinking about the growth starting in 2021 and both holistically of RWAs on chain and then also even more narrowly thinking about RWAs and institutions on Solana. And actually, when we got started in like roughly 21, 22, we were building on Solana at the time and we were exclusively focused on RWA lending. And the reason we kind of expanded our focus was because RWAs felt like they weren't happening and they were kind of moving too slowly and the DeFi market was way bigger. And now it's very interesting. Just one thing about the number of issuers and institutional participants that are, again, not just excited about building on chain, but actively deploying and that have Solana as their kind of top priority as a chain, that have these different DeFi products as a top priority. And it's less about just like distributing this tokenized asset or putting out this press release, but you have folks with real skin in the game kind of pushing some of these different products and assets. And so that's been just something that's very cool to kind of see happen. And obviously, I'm biased, but kind of having this order book model and your ability and design surface area on a chain like Solana, where you are able to create institutional grade products with kind of more configurability and sophistication than you would traditionally be able to on EVM based chains, I think has been a bit large part of the reason you are seeing kind of this increased demand from these institutions. And so that's been a very exciting part of the past year and expect it to be kind of one of our big focuses this year.
So this, again, a tiny sidebar, but you and I, before we hit record, I was talking about the interview I just did with R3, and it, like, to me, that's like a kind of a weird full circle moment because I was like deep diving them in like 2020 or 2021, and hearing them describe like, you know, why they couldn't do something on EVM and they're leveraging Solana, and I would imagine the retail user base as well. So I mean, you kind of went into it a little bit, but talk about your experience building on Solana, I guess, a little bit more deep if you want to, or just, you know, maybe expand a little bit, because I'm always interested to hear why people are choosing and growing on different networks.
Yeah, so I mean, one core aspect that's really important to lending is the ability to escrow these assets and have assets that you're using as collateral. And like one of the big step function efficiencies you get to building on chain in general is having this single programmable ledger of assets. So particularly with over collateralized lending, when you think about this concept of like a unified portfolio and unified margin, you need that kind of general purpose blockchain. And then beyond that, for specifically what we're building, which is order book based lending, this design surface area was something that we could only access as a function of Solana. If you're creating orders on like a per loan basis, and you just have something that's operating at a higher frequency and with kind of more complexity than a pool based model. And this was something that we had tried originally on EVM when we got started in 2021. And it wasn't until we discovered Solana and kind of what we were able to do here that we were able to build what we're building now. And I think you saw like a similar evolution with trading, right? With Phoenix and Serum and Ellipsis, and just this shift towards like order book and actual like market infrastructure that this where you have these like market structures that are only possible as a function of the chain. And I think if you again look to TradFi, like most of the products and the way risk management and financial management work are not algorithms abstracting these different market structures, which is what like AMMs for the most part do, and like algorithmic money markets do. And they look much more like these direct counterparty transactions that kind of get generalized through these different kind of abstractions on top of them, but that base level still exists. And so I think that's something that is like a critical part of the foundation that's getting actively built on Solana.
So I'll ask this is a low hanging fruit question for me, because, you know, I've done so many interviews across a lot of different ecosystems, and it's always interesting to me to kind of look at the landscape on different networks. And obviously Solana has a really active user base, really, and a lot of really, really active DeFi platforms that have hit crazy volumes and valuations. So I kind of have a twofold question for you. First and foremost, why do you think that is happening right now on Solana, as far as the traction and adoption? And secondly, do you look at it as like a competition, or maybe should I say like co-opetition, like from LoopScale standpoint, or maybe look, a little bit into like competitive advantage and things like that. So basically, why are we kind of seeing what's happening on Solana happen? And then secondly, how do you look at your guys' growth within that kind of framework?
Yeah, I think going back to this idea that like the biggest advantage of a public blockchain is having a shared ledger across all different types of financial transactions and counterparties and assets. Solana is the only chain that one has this super active DeFi ecosystem. And so you have all sorts of financial products, is something that is cheap enough for these stablecoin payments. And so you have this kind of network effect or flywheel of each incremental use case that all, again, pile onto each other and build momentum. And so whether that's a integrated payments platform, or the ability for you to accept payments on Shopify via Solana, or the fact that there is this huge DeFi ecosystem. When you look at other chains, you're usually forced to make a trade-off around, is this something that's good for payments? Is this something that's good for DeFi? Is this something that has a strong user base? But on Solana, I guess, just as a function of time and the network effect of liquidity, you've really seen this, like, again, compounding flywheel between all these different use cases and participants and builders really start to kind of catapult, which has been really awesome. I mean, like when we first started, like one of the biggest questions we got during our seed fundraise was like, why are you building on Solana? Or like, there's no liquidity. And it's crazy to think about how much has changed, where it's like a de facto a lot of the times. Definitely super excited to be here after all those years. But, and then to your second question in terms of like competition, obviously, yeah, like you said, there's like a burgeoning DeFi ecosystem on Solana. I'm someone that thinks, one, I think our product is complementary to a lot of the pool-based lending protocols. I think those are great for very specific use cases of like kind of retail-oriented, collateralized margin. I think when you start to work on some of the TradFi markets and RWA assets, you just kind of require this new architecture. And so in that context, that market is huge and trillions of dollars, and there's still kind of so much, like DeFi and Solana today is 1% of what it will be 10 years from now. So there's still 99% left to kind of bring on chain. And there's so much left to be done that it's really hard to look at it as a zero-sum game.
I have a kind of a point, and this is like the first time in like I can't remember how long. In the past 2 days, I've had 2 interviews back to back the term flywheel effect, because literally I did a video last week where like the entire graphic says flywheel effect. I have to just randomly bring that up. And I think you bring up a really good point too, which I think is super interesting, because a lot of the times in crypto, when you're kind of just staring at crypto Twitter, it seems like I see a lot of like networks competing with each other for the sake of like competing. And it's like, dude, there is like less
much
than
bigger
1%.
fish to fry.
Yeah, less than 1% of the people here, I know that we see statistics that are like 15% of Americans hold crypto, and it's like, who cares about what some guy randomly like picked up 3 years ago? It's like, how many people are getting up every single day and using crypto or using blockchain? Because I would argue we're probably, like you said, maybe 1%, maybe. So I guess
it very much exists, as I was going to say, it very much exists as an asset class. And yeah, like you said, like my mom owns Bitcoin. Does my mom know what like a lending protocol is? Maybe, even though I'm founding one. And I think there's still a long ways to go in terms of it, like instead of Swift network, instead of like wires and ACH, that you have, again, credit transactions occurring fully on chain through enforceable smart contracts and through payments happening on chain when you click pay. And you have so much money moving hands. Like, what is it? I think Stripe processes like $1 trillion, $2 trillion of payments on an annual basis. And I would guess a very, very, very small fraction, if anything, is going through on-chain rails right now. And to me, and I think a lot of the builders in this space, there is a very distinct view of like crypto as architecture or infrastructure and crypto as an asset class. And prices can do whatever they want. And there's still going to be this incredible use case for crypto as infrastructure that we are so far from kind of penetrating. And right, like the statistic of 15% of Americans owning crypto is very different from 15% of Americans using crypto as infrastructure.
Sure.
And I think that is the kind of gold or North Star metric that is worth pursuing, and is also, again, like what leads to having more positive sum games in the space, is that there's still a long ways to go.
What I think super interesting is like I look at like platforms like what you guys are doing, and in that vein, it's like literally, I fundamentally believe, just from my personal belief, that like the majority of what exists right now is just going to have blockchain or DLT under the hood at some point in time. It's just a matter of time before that happens. And even look at like RWAs from like through like the trade finance lens, or different industries that maybe not be like, they're not like sexy for crypto Twitter, but there's like trillions or quadrillions of like dollars that are moving in these industries. And then I look at a platform like what you guys are building, and it's like, even what you guys are building right now is going to look so crazy, I would imagine, like 5-6 years from now, probably even. So many different types of asset classes probably are going to start being on these platforms. And I'll get to the forward-looking statement question here in a couple minutes, but I guess that's maybe a question I have for you, because I'm always kind of semi-jealous of like builders when I interview builders, because I just sit here and like interview people. Like I have zero technical skills. But I've always wanted to. Like, it's super interesting to me. And I think that you guys are the ones that have sparked, the BlackRocks and Franklin Templetons of the world, because they didn't have these innovation arms where they're like, let's try to figure out how to break stuff. It took the people that were willing to take the risks to get the institutional adoption. Maybe, do you have any thoughts on that, just in general, like what that's kind of been like to be one of the builders, like that is fundamentally changing the way that the world operates?
For what it's worth, I think like the actual communication and even like romanticization of the space is actually one of kind of the biggest, I don't know if obstacles, but like most important pieces. I think that's like you said, finance is something that for the most part, and really up until like this most recent decade with like blockchain and Robinhood, is something that has kind of been the root of all economic progress, but at the same time is very much plumbing. And it's something that you and I take for granted every day. Like, we don't, in the same way we don't worry about how the toilet flushes, we don't worry about what happens when we swipe our credit card. It's just the money is there and that happens. And I think that is the true end state for finance and any financial innovation, is like, I don't think people should be like swapping and kind of doing all of these different like managements like exactly themselves. And more, finance is a tool and a means to exist and do cool things you want with your life. And so I think that is kind of the end purpose of blockchain. And I think it's also why the space has like historically, like, if you think about how to attract builders, it's a lot easier to attract builders, in my opinion, to a space that's like a lot more in your face, like something like medicine or like biotech, where you do see those things and you do see the impact it has on your life and you're not taking it for granted. And so this idea of like being able to more succinctly communicate the kind of importance of finance and the importance of financial innovation, and how like saving 200 bips on a transaction is actually like going to change the world, and that is like maybe not the sexiest thing in the world, but being able to like issue money and credit and transact more efficiently just means capital ends up being allocated to its best use case, and there's more capital unlocked, which to me is like the kind of, when you step back, is like an important thing to remind yourself, because crypto Twitter, I think occasionally, because there is more of a consumer focus and those things, like you said, aren't like the flashiest, sexiest things in the world, is like an important thing to remind ourselves of on this kind of long journey towards replacing traditional financial rails.
Sure. No, I think it's gonna be super interesting, because like, even as like small and medium enterprises, like mom and pop shops at some point are probably going to be using DLT. And that doesn't mean that they're going to have to like go onto Twitter and like become a quasi influencer.
Yeah, like, and that's as it should be, right? Like, my mom should be able to tap her phone and it's using like USDC collateralized by her Bitcoin, and she doesn't have a Twitter account. She doesn't even necessarily like know what like a seed phrase is.
Sure. So I would love, because I'm sure there have been milestones for you guys, but through LoopScale's standpoint, what are some of the milestones that stick out to you since you guys have launched? What made you realize that there's traction? I know that you guys mentioned kind of specifically RWAs initially, and now kind of where you're at now with all these different products. But I'll keep rambling if you don't stop me. So any milestones that really stick out to you in the past here?
Yeah, for me, like some of the things that I think about, like looking back on the past year and that I'm particularly proud of is kind of the role we had the opportunity to play with some of the biggest kind of protocol launches and asset launches in Solana. If you think about like ZBTC or Onri or Hilo, all these like major protocols, we were kind of really got to work with them at their launch and build on this idea that like credit issuance and credit infrastructure should not be the afterthought to a new protocol or a new asset. And it's been that way largely because you have like a capital inefficient model that requires liquidity bootstrapping or you can't price risk. And so what does it look like if you're able to offer credit on day one in a risk managed way, and being like a major part of like the total number of, or like TVL of Onri, and having 30% of Onri TVL minted on LoopScale, or holding like a large sum of like the Hilo protocol TVL, and being able to support these teams as they launch these really cool products and assets, was definitely something that was super cool and exciting. Another milestone, yeah, like you mentioned, these different launches around the RWA products. I think the Acred launch was a really cool milestone for us in working with Securitize in launching really what was the first permissioned DeFi product. And it took advantage of token standard and Solana innovation I'm really excited about, which is token 22, and made compliance and this kind of regulatory use case actually very straightforward to implement out of the box, which has historically been kind of one of the big hurdles in crossing these two different like between on-chain finance and TradFi assets. And then obviously like just seeing in the more abstract numbers and growth has been really exciting, just going from $10 million of TVL to $130 million, just seeing like the natural user base grow and people having things they want us to change about the product, and that natural traction. And obviously creates its own set of stresses and things to think about, but wouldn't have it any other way.
So we know how fast this industry moves, and thanks for sharing Token 20. Like I am still kind of learning about every ecosystem and every interview that I do here. So permissioned tokens on Solana is something that I think is interesting. I'll be diving into that. So thank you. And I think that, sometimes there's so much stuff happening on a daily basis. Like I brought this up literally. You asked me how many interviews I do daily, and it's like, sometimes it ranges. I did one this morning, and we were talking about how a handful of years ago, one of the announcements that we see multiple times a day would have driven all of crypto's news cycle for 6 months. And we are seeing so much adoption now. What are you excited about, I guess, low-hanging fruit question, for the rest of 2026, whether it be from the personal standpoint, LoopScale, Solana as a whole, or the wider space?
Yeah, like you mentioned, the market is like, it's going crazy and like a positive. I think a lot of people again tie the asset prices to the infrastructure. But if you are scrolling Twitter again, yeah, there is a new announcement every day that is not a press release. It is a live product that someone's launched that is usually has like pretty cool and interesting fundamentals or just kind of truths about it. In terms of what we're excited about, kind of looking forward and thinking about this year, and what I'm excited about is, like you mentioned, the adoption of RWAs and the entrant of all these new participants. I think like there's a number of challenges that the ecosystem still face. I think we need more institutional risk management, more institutional curators. I'm excited for more of these institutions to start playing a role in that way. I'm interested in or excited about kind of when we get to the first fully on-chain private credit fund. Right now we have a lot of off-chain funds being tokenized on-chain and borrowing and lending against private credit. But being able to have kind of the full ledgering and asset visibility downstream of the deposit into a vault, and now all the borrowers, and you start to see lending vaults start to look like that. But I think more of a focus on institutional borrowers, even under collateralized lending. So we're actually moving kind of these different financial products on chain, not just financial assets on chain. And then I'm very excited about, obviously, like the regulatory clarity, which I think we're starting to see more of. And as a result, seeing more participants take advantage of. But I think getting kind of more of the green lights around all sorts of issuers being able to both tokenize on chain as well as deploy on chain will be a pretty awesome catalyst.
I think I was doing an interview I think it was last week, and it was brought up like, most people in like the traditional world, obviously like their employers will have like a 401k or different things, and they'll match, and then they kind of, distribute out from their paycheck or do whatever they do. But like, think about how many times, because I remember like having one of those 401ks at my job and like trying to look into, there was like three options. One was like, I want to be safe with my funds. And one was like, I want to take a semi-aggressive approach. And the third one was like, I want to invest in like the high tech fund or something. And I tried like finding out what was in this high tech fund. And it was just like, there was no transparency.
Yeah.
I think that is one of the big things, that blockchain will bring, obviously in a way that we can, is like, you get to see the buy and the sell side. You get to see both sides of things in a way that really is like revolutionary, which doesn't really exist out there traditionally. So it should be pretty interesting.
Yeah, it's incredible both from like the lens that you mentioned of like consumer transparency and actually having visibility into your investments. I think it's also incredible in the downstream effects in terms of if you are a lender and you're trying to lend against your tokenized 401k, you'll be able to offer a much better LTV if you actually know what those assets are underneath, or a much better rate. And there are so many things that happen downstream of better visibility, as well as like escrows and rule-based enforcement on these different financial products, and not like this person didn't pay, now there's this like 3-week process to liquidate the asset, maybe you'll get some money back. And like, that based on this liquidator and the fact that these assets are here and the way this smart contract is written, that you will for sure get your money back on this specific trade.
Well, I want to definitely share my screen and make sure people are aware. Go to loopscale.com and learn more about LoopScale. The blog has tons of different announcements. This is, the Q4 2025 recap I had pulled up there. Give Genfinity a follow at Genfinity. This will be live there. Give LoopScale a follow at LoopScale. Give Mary a follow at Mary Gooneratne. And genfinity.io. We will have this on there as well. Mary, I really appreciate you breaking down everything that you're doing with LoopScale, all the growth in the Solana ecosystem, RWA evolution here. And as always, this discussion's for informational purposes only. But thank you so much, Mary. And don't be a stranger. Please come back again in the near future. And appreciate it.
Would love to. Thanks so much for having me on. It was very fun to chat.